Friday, October 22nd, 2021, Monaco 64, home of alternative economics and contrarian views. Before I start today, I'd like to say that I did an interview with a very interesting individual, Ali Chahadi. He's based in Beirut, Lebanon. He's a media and film producer. He has a YouTube channel, and recently he was interviewed by Silver Bullion TV about the current situation in Lebanon, their currency collapse that started in September 2019, which is an interesting time because that's when the repo crisis started on Wall Street as well. And he spoke to me for almost an hour about the situation on the ground for a normal individual in Lebanon, about the currency collapse, how it's leading now to hyperinflation. And I did the interview yesterday. I posted it yesterday. It's called Lebanon's Currency Collapse and Hyperinflation is a lesson for the West. It's a lesson for us. So if you haven't seen it yet, search for my YouTube channel under videos and it will be there. I'm going to put it up in the cards here as well and in the description of this video. This morning though, I want to talk about backwardation, and it's a very technical term. It's a term used in the futures and options market. And of course, I worked for 20 years in the futures market, mostly in the government bond market, not in commodities, even though I did trade some commodities on and off for some of my institutional clients. So I saw a story, actually it was one of my many viewers who sent me a link. And this story is from yesterday, and it says, Zero Hedge, JP Morgan, we could be just weeks away from Cushing effectively running out of crude. So what is Cushing? Well, Cushing is a place in Oklahoma. And if you remember well, last year, crude went to minus $37.50 WTI crude for spot delivery. The front month contract went to negative. And why was that? Well, because there was a glut of oil at Cushing, Oklahoma, and people who were long the contract, they're trying to get rid of it because there's nowhere to store it, and keeping the crude would have cost them a lot of money. So they're trying to get rid of it. They're trying to give it away because it would have been more economical to give it away. But now JP Morgan is talking about the fact that the supplies of crude in Cushing are dropping fairly steeply, as you can see here by this chart. So let's see what they're saying here. It says, in a note predicting the near-term dynamics of the oil market, JP Morgan's commodity researcher Natasha Kaneva writes that in a world of pervasive nat gas and coal shortages, which are forcing the power sector to increasingly turn to oil, boosting demand by 700 BKD during winter and drawing inventory by 2.1 million barrels per day in November and December, Cushing oil storage, which just dropped to 31 million barrels, the lowest since 2018, may just be weeks from being effectively out of crude. That's the storage facility in Cushing, Oklahoma. The bank's conclusion: if nothing were to change in the Cushing balance over the next 2 months, we might expect front WTI spreads to spike to record highs, a super backwardation scenario. And again, I'm going to recommend another video I did with Rafi Faber 2 days ago, where we looked at copper, how a few days ago there's a super backwardation in copper. Copper supplies almost running to zero in the LME. The LME is the biggest industrial metals exchange in the world, and their warehouses we're running out of copper a couple of days ago. There's another story that came out yesterday as well, how nickel supplies are also going lower, and nickel is also in backwardation. Why is this important? Well, because backwardation, the flip side of it is that it means people don't want dollars. They don't want the fiat currency. They want to have real things now, because normally in the futures market, because of the cost of storage, let's say the future for delivery in 1 month, let's say it costs $100. The future for delivery in 6 months is going to cost, let's say, $102. It's the cost of storage, the cost of financing. So that's called contango. But what's happening now, and what's happened in copper, could happen in crude, is that the front month contract or the spot delivery, spot means just delivery almost right away, that price is going a lot higher, and the future price is completely below that. So let's say crude oil would be costing $88 for the front month for delivery in Cushing, Oklahoma, the WTI. But February crude would be like at 75, and it's usually the other way around. That shows that speculators, the people who produce these things, the people who use, the end users, they want the supply now. They don't want the dollars. They don't. It's a signal that they don't trust the dollars anymore. The paper currency. That's the way I see it. If, let's say, there was backwardation in one of the commodities in the last 12 months and that was it, let's say nickel, and everything else was running perfectly okay, we could say that was an aberration, something to do with nickel. But this is happening everywhere now. We've seen backwardation in many other commodities in the last, well, since 2020. So what's the granddaddy of super backwardation, and also something called permanent backwardation, when people want something now and the price for now is always higher than the price for the future? Well, it's in the monetary commodity, it's in gold. And I remember reading about this many years ago. And this was noted and written by Professor Antal Fakadi. And this particular article is called "My Crusade to Fend Off Permanent Gold Backwardation." Why fend it off? Well, because it would be disastrous for civilization. This is what Professor Fakadi said about the threat of permanent gold backwardation. He says, it's one that, in my view, casts a dark shadow on the future of our civilization, much the same way as the disappearance of gold from commerce cast one in 476 AD, the year when the western half of the Roman Empire collapsed. World trade succumbed to barter, law and order broke down, and centuries of Dark Age descended upon Western Europe. So I'm not going to go through this whole article by Antal Fakadi, but I'm going to put it in the description so you can read about gold backwardation, why it's so serious. I'll try to give my 2 cents here. The reason why it's serious, and most people in the mainstream won't see it as serious, is because gold really is the monetary commodity par excellence. It's not Bitcoin. And you know that's why the major countries in the world, major sovereign nations, hold thousands of tons of gold in reserves, because without that, their monetary systems, their currency systems would be under threat eventually. And What permanent backwardation means, it is that no one wants dollars, they just want gold now. And that gold basically goes into hiding, and the same thing for silver. That's what permanent backwardation means, when gold and silver go into hiding. So that's what it will mean. Backwardation in gold and silver will mean that they're not obtainable. You won't be able to get them. And that means that demand for fiat currency has collapsed. and it doesn't necessarily mean that, for example, in the foreign exchange market, the dollar might not be rising versus other fiat currencies. And I don't even know what would happen really to the financial markets when this kicks off. And I think it's a bad sign that it's starting, and it's so pervasive now in the commodities market, this backwardation. You've seen here JP Morgan warning about a super backwardation in crude oil. You can be sure we'll be keeping an eye on it. Rafi Faber, he's been keeping an eye on it, and I'm sure we will warn you. But if you've been stacking physical gold and silver for the last few years, and especially this year where it's been on sale, you will be okay. But again, listen to my video with Ali Chahadi from Beirut. There's much more to surviving hyperinflation than having prepared financially. It's much more than just that. And it's not very different from what Arpad from StarPath Academy told me a few months ago about hyperinflation when it happened in Romania in the 1990s. It seems to be always the same message. Be part of a community. Help each other. Because sometimes even real money, gold and silver, will not help you in a collapse. And by that I mean you might not be able to get anything. Of course, it will help you on the other side, because you will be the only people that have real money. So with that, let's quickly look at where the markets are this morning. It's 8:36 a.m. London time. We've got spot gold at 1791.30. It's up $8.50, so 0.5%. High's been 1795 and the low 1782. Silver's up 17 cents, 0.2% at 24.32. Range has been 24.37 to 24.10. The Dow futures up 28 points, NASDAQ 100 futures down 60, S&P futures down 2, FTSE's up 27 points at 72.14. To the currencies, sterling is unchanged, 137.90. The euro is at 116.43, up 0.2%. The dollar is unchanged versus the yen at 114. And now there's some news about China and Evergrande. They actually had a deadline of 1 month for a coupon payment that they have had on a dollar bond, an offshore bond, last month. And we've just had news from the Chinese state media, and it's been reported in the FT. Evergrande pays missed dollar bond coupon, says Chinese state media, and apparently they made the interest payment to Citibank. I guess that's in Hong Kong. It says the Security Times reported on Friday that the real estate group had a day earlier transferred 83.5 million interest payment to Citibank, the trustee, and that the funds would be paid to investors before the grace period expires this weekend. So there you go. I think the deadline was going to be the 23rd of October, because the previous deadline had been the 23rd of September, but they had a 1 month grace period. So looks like the situation is stabilized for now in relation to Evergrande. So the dollar right now is down 0.1% versus the yuan at 638.56. What about the other currencies here? Aussie dollar is up 0.5% at 75 00. The US dollar is down 0.25% versus the Canadian dollar at 123.35, and the Kiwi dollar is up 0.4 at 71.82. As I said again, I think the way to look at the dollar, and when the dollar is under pressure, the whole system is under pressure, because all other fiat currencies are at below the dollar. So if the dollar is in trouble, all fiat currencies are in trouble. And the best way to realize or discern or to notice that there's something wrong is through the commodities market, through backwardation, and I think that's a really bad sign right now. So to the commodities market, we've got WTI crude 82.34, that's unchanged. We've got high-grade copper up 1% at 457.25. We've got natural gas up 1.2% at 536. Anything else we need to look at? Yeah, nickel, that's up 0.5%. So nickel looks very bullish as well. I was talking about the fact that there was backwardation yesterday in nickel. And if you look at this chart here of nickel, yes, it made a multi-year high yesterday, nickel, spot nickel. And to finish off, let's quickly look at the 10-year yield. 10-year yield is creeping up. We're almost back up to 170. It is unchanged overnight, but we are at 1.68%. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great weekend. Take care. Bye.